Hello again, everyone. This is Joe, and in this technical analysis of the stock market video, we're going to take a look at this. I'm calling it a view from the top because if we're not at the top, we are very close. So let's start off here with the Dow Industrials. It was down 118 points on Friday, and you can see a lot of selling kicked in the last hour of the day, and almost all the indices closed on their lows, all the major indices. And it really has been down for about the last 2 weeks. If you look at the close on December 18th, 24,792, and here we are 24,719. So what is that? About 73 points below that close over the last 2 weeks. Now we haven't broken down below that 10-day moving average yet, so I'm watching that, watching to see if we get some kind of sell-off kick in here at the beginning of the year, and watching this trend line to see if this trend line is going to hold. The next one we look at is the weekly chart. You can see we did not go anywhere for the week, down 34.83 for the week, and we just almost mirrored the prior week, the week ending December 22nd, right before Christmas. Tight little doji candle, tight little trading occurring in here, getting very compressed. Okay, so the real key is, after this kind of compression, are we going to get some explosion, which we have a tendency to do, and then which direction is that going to go? So the trend is still to the upside. It hasn't broken down yet. We're not even close to being below a 10-week moving average. We are outside this channel line, though. We are at an extreme. This is the channel, the trading channel that it has been in, the Dow Industrials have been in for this entire 8-year rally, and we are in what I call a throw over the top of the channel, and that has a tendency to happen many times, and that's exactly what we're doing right now. Let's take a look at the one of my key indicators, the put to call ratio. This is the level of puts versus calls that is being traded on the equity stock, on equities, so on stocks only, doesn't count the indices, on the Chicago Board of Options Exchange. So this is a CBOE put to call ratio. The 10-day put to call ratio is at 0.57, 57 puts for every 100 calls. And I'm coloring it yellow because when it gets below 0.60, that's when I color it yellow. When it gets below 0.55, I color it red. So it's like a dashboard color scheme that I've got. I've got data back for well over 10 years. And right now, this is the longest stretch in several years in terms of extreme optimism with people who are trading stock options, okay? And so really, really watching this. This is like a flag that's waving saying optimism is at an extreme, folks. All right, so that's a picture on the Dow and one of my key indicators. Let's take a look at semiconductors. Now, the semiconductors, this was the biggest percentage gainer for the year of the industry sectors, the S&P industry sectors that I look at. And it was up 36.53%. So it held that, even though it sold off some here over the last several weeks. You can see that the high was the week ending November 24th, which was Thanksgiving week. And then we sold off some. And now we're right at this trend line. We are at this trend line of the entire move from back here, and when was that low? February of 2016. So we're coming up on almost, it's 22 months of rally, and we are right there, and we're very compressed. So I think we're at a critical juncture here on the semiconductors, but it was the leader for the year. And then when we look at what was the loser for the year, the U.S. Telecom ETF, IYZ is the ticker symbol, down almost 15% for the year. And you can see this is the trend. Where is the end of the year? It is right about there. So it was right in here at the end, for the end of the year. It rose a little bit that first week of January, and then that was it. And it just trended down. Now you look at this trend line that it's been in, and you say, well, it's still kind of trending upward. Well, yeah, but it really is a counter trend, and I'm going to show you the whole picture here in a minute. Okay, here's all the data I have on IYZ. This goes back to, what is the data here? 2000, so May of 2000. Maybe there was some created before that, but you can see the huge sell-off. Not only did the internet stocks have a bubble, the telecom stocks had a huge bubble from the 1990s. Global Crossing, WorldCom. I don't know if you call Enron a telecom stock or not, but You talk about some stocks that had huge bubbles and then just, crashed. This is exactly what happened. And then you could see the bounce that happened took it about, I don't know, I'm just ballparking, about halfway back, and then it went to a lower low in 2008. And now this rally has been very, very flat, very weak. We started to get slightly above that 2007 high in here, and we did for maybe just a couple of weeks, and then that was all she wrote back here at the end, at the beginning of the year of 2017. And then she sold off. So now I think watching this trend line, watching this movement here to the downside is pretty critical on IYZ. And then one last ETF I want to talk about is India. This is the leader of all the ETFs I had on my dashboard. So I talked about semiconductors was the winner for the U.S. Industry sectors. EPI is the winner of all the ETFs that I'm looking at. Now, I'm not looking at the leveraged ETFs. I'm not looking at the ones that have double and triple leverage and all that kind of stuff that folks are using. I'm looking at just your traditional ETFs. So this is in the emerging market emerging market bucket. Okay, so this beat out EEM, which had a fantastic year. It beat out all the rest of them. FXI, it beat FXI. Now, the dollar-wise, it wasn't huge, but percentage-wise, very nice gain, almost 38%. Now, I do think that we're getting a little bit of an ending wedge in here, a little bit of an ending diagonal pattern, and getting a little throwover with this. So this pattern has really got my attention. This is interesting. If you're in this, you need to be watching. Now, this is a weekly chart, but you need to be paying attention to how you've got a trailing stop and what you're doing, because it's had a great year. All right, that's it for this week. And next week, I'm going to talk about the depression that almost nobody knows anything about, and why I think that depression and the price patterns that happen around that and after that are really, really key to what's going on right now and what's happened since 2000. So I'm going to be talking about that in a video and a blog post next weekend. Everyone, have a wonderful week, first week of the new year, and we'll talk to you on the next video.